All right, hey, good morning, traders. TG Watkins here. It is July 7th when I'm recording this. I hope you guys are all doing well. And yeah, I got some things to talk about today. I think it's pretty interesting. Now, I was on vacation. I was on a boat, a cabin cruiser that my wife's family rented for a month, and we joined them for about 5 days. And that was last week and leading up to 4th of July, basically. And some of the things that I've been writing is saying, the market needed to digest this really big move that it had about 2 weeks before the 4th of July. And that's kind of what we see here with the market digesting newsletter that I put out there. So you guys can find this at profitpilot.com. And then the other thing, before I headed off on that vacation, I made a post and I said, the market is down slightly because, this is what we're expecting. I said at some point, I figure there will be a small bounce, probably around the daily 21 for the S&P. Now, the move that happened obviously was much bigger than a small bounce, but still, what I was looking for is support around the daily 21. And I said that might help reveal which names are strong because they might take that opportunity to move up, or it could help names from stop going down and work on putting in a base. The SPY may want to go lower overall, but we know that the daily 21 is a typical support area / bounce area. The pullback has been very orderly so far, which leads me to believe the market is still bullish. It just needs to rest. So that is what I left everybody with, and if we look here at the S&P, that is exactly what happened. So we can see in this area that clearly the market was overbought. We had a lot of indicators showing that it just very, very overbought. You can see it went outside of the ATR bands and all that kind of stuff. And so this pullback, the pullback that we got for about 5 days, very orderly, very methodical, all that kind of stuff. And it basically came right into the 21 EMA and then jumped up. And then we had a huge move leading up into the 4th of July. And that is a seasonally bullish thing. I even told the Moxie subscribers, I said, just be prepared. I'm going to be on a trip. I'm going to be on a boat. I won't be around. But just so you know, we've been having multiple days of a pullback, and then there's the 4th of July. I said, there could be pretty good timing that something around here leading up into the 4th of July. This is setting up for an up move, a bullish move, a seasonally bullish move into the 4th of July. So I told everybody about that. Hopefully they were able to take advantage of that while I was on the trip. And then, so we got that. And then we got this secondary big move, leading up into the 4th of July, and they hung it around for 4th of July. They're not going to do too much. They're just going to leave it. It's the holiday. But then, of course, right after, then they start dropping it. And that makes sense. Again, look at the gap between price and the moving average, and, basically, double top. And we were seeing some negative divergences out there. So really, at this point, the question is just, what is the S&P going to do? What are the markets going to do to flag or dip or, something to basically rest? And I still think that the overall market is strong. It's just really a question of what do the indexes need to do in order to kind of chill out a little bit. Let me show you a couple things. Like if we look at the IWM, because if we come over here, it's actually not looking too bad. These dips look like they are wanting to get bought. So we come in here. I guess my internet is slow today. And it's not looking too terrible. This was that pullback we were talking about with the rest of the market, and then we had the move up into the 4th of July weekend like that, and again, did a double top like the rest of things. And then yesterday, we got a pretty big move to the downside, but then today it's right back up. And ultimately, if you look at this, what are we getting? We're getting a flag. So, here's that, and then you're getting kind of this choppy flag here as price starts to digest the really, really big move that it had here. And so that's what we're starting to see. This move here was so big, it put in a lot of distance between price and that moving average. So what is it doing? It's going sideways until the moving average starts to come up closer to it. So I really think that's what's happening through here. Even if you look at the weekly time frame, things are looking pretty good. Let me really zoom in on this. And you can see the weekly time frame, again, had that really big move up like this. We put in a gap between there. You can see that gap. And so what did it do? Price came down and starting to find that support, and hopefully things will continue to the high side. So that's what I'm looking at. I think that everything is looking pretty good, constructive. I think dips are buyable, so just kind of find that opportunity to buy the dips. And if we look at the VIX, I think the VIX needed a little bit of refresh. Let's kind of get that in. And this might have helped it. We were getting, the VIX was getting down to 13. That's that was pretty low and needing a little bit of a refresh. You can see that every time the VIX kind of gets low, pops up a little bit, gets low, kind of pops up for a little bit, kind of low, pops up for a little bit. So I just think, yeah, it was about time. And you could actually see with the Moxie indicator, we had this divergence that was starting to kick in. So we got a little pop. I don't know where it's going to go. I don't think it's going to be too bad, but a little bit of refresh, cycling, I think was healthy and good to kind of refresh things. You look at the put call ratio, that kind of stuff, and yeah, seemed to be appropriate. Now here's another thing we can look at. We know that a lot of stuff that has been talked about. We have the the S&P and the indexes have been carried by 7 stocks, the biggest stocks. But let's take a look at the RSP, and you can look at this on the weekly time frame. We had the RSP kind of come down here into support, and then it has started to move up. This is really great. This is on a weekly time frame, and even on the daily time frame, you can see that was when the market got overbought. This is where it pulled back into the 21, and now we're back up again. So the fact that the RSP is starting to move and engage, this is great. This means that we now have a broader based participation in the market. We're starting to see more things work, like the IWM I think is looking good. The Dow has been sideways, but I think it's going to eventually work out too. It definitely has not fallen apart, which is good. And we're seeing the semis up, we're seeing the NASDAQ. I mean, things are starting to work. And so I don't think that we are too much at risk of all this just suddenly falling apart. I do think that we need to be careful when things get a little overbought, a little bullish, and just be prepared for a pullback. And then I think we're kind of in the buy the dip mode. And if you can see that with RSP, RSP, IWM, the small caps, the broadening out, we're starting to see more support out there. So a couple examples. Again, if we look at the Dow. Let's get that over here, the DJIA, and on the monthly chart, if you look at the monthly, you can see that price has been staying over the monthly 10, and if you look here at even the weekly chart, you can see that, just look how well this thing has been holding the weekly 50. That looks really nice, and it's just kind of bopping around. The Dow's not really the most exciting ETF or index, but it's working. It's working. I think that is going to continue to go higher over the course of time. And it just shows that, I think things overall are looking pretty nice out there. So maybe if we kind of look at a few examples, Squarespace is one that I have been talking about a few times out there. And what I'm seeing are longer time frame charts moving. This had a pretty wicked couple of moves. For example, this basically right there made a new high. Call it a failed breakout, call it a pop and flop, call it a double top, whatever you want to do. That they then took it. Look at this thing. They ripped this thing all the way down for I don't know how many days straight, right down. That is a tough thing to hang on to. But if you look at the overall picture, it did make a higher low. And honestly, if you just look here, it is flagging right there, just flagging. And so in a bigger picture, this thing is still perfectly intact. And in fact, if you look at the bodies of the candles, they are staying above the weekly 21. This is all working very, very nicely. So it might be a pretty big range that you have to handle in through here, but it's working. And I like what's happening in through here. So it might be a little bit tough as a swing trader because it's working straight up, and then boom, you get hit. But if you look at a bigger picture, it's coming up and it's actually fairly orderly on the higher time frames before maybe going higher. So that whole buy the dip or buy the flag or something like that we are seeing in the market. Let's take a look real quick at IonQ, because this I think gives another example of kind of what we're looking at in this sort of market where names, and again, kind of normal. This actually feels somewhat like a normal market to where names go up, they get a little overbought, and then what do? They just rest. There's your flag. Look at that. That's a perfect flag. And so we need to be careful not to, buying the breakouts, not really working. And finding exactly which breakout is going to work is a little bit challenging. So if you can kind of figure out where in the lower part of the range that you can get, that would help figure things out. So the sooner you can kind of figure out the range and you can wait for the lower pullback, that means you can then just kind of wait. You could be fishing for these things, buying those opportunities, buy the dip, and then just kind of hang on to it and wait for them to start to move up. That's what I've been seeing in this kind of market. We can look at another one. I've got a few examples that will do well for this. But PH was another one. And what you'll see with this is, if you zoom out, if you look at the monthly, if you look at the weekly time frame, they look real nice. But if you kind of zoom in, it's like, they're starting to get a little messy. And that's kind of the challenge. Let me slide this one over here, because you can see even on the hourly chart, I mean, that is really, really messy. Now, I will say the Moxie indicator is always right when it's going, but it can give kind of a few false moves just because price is so choppy. And if you look here too, you can see, well, this wasn't quite ready here because price was underneath the downtrending daily 50. But then you notice that price starts to get over the daily 50. And in fact, the daily 50 starts to turn up. And you can see ultimately price really didn't go anywhere, did it? It really was just staying in range. But the difference is that by going sideways, it crossed over the 50. And you can see that there is a clear delineation from here to here. And so it was character change. Now, it didn't break out right away. Maybe it would have been tough if you're trying to figure out where to get in here. But if you kind of find those decent areas around the moving average, you can just sit on it and wait for whenever it does finally get to move. And then it gets even clearer if you look at the weekly chart. Look how nicely this was pretty much staying above the weekly 21. Very nice. You even had the 8 staying over the 21 that whole way. The Moxie indicator's above 0. You even had the Moxie indicator here, fire, and again you had the one fire here. But yeah, on the hourly chart, man, that is really, really messy. So that's kind of why I'm looking at this and saying might have to change our strategy just a little bit on some of these names and some of these positions that we're seeing out there. Autonation AN, another one that technically is just a great chart. This is actually behaving very, very well. But if you look down too closely, you're going to be getting a lot of back and forth. Because if you look at just price, I mean, what's it doing? There is no momentum. And since the Moxie indicator is a momentum-based indicator, this time frame is not working for it. It's doing better with the more you zoom out. Daily chart, hey, look at that. That's working great. Weekly chart, also looking great. Look how well that's holding the weekly 21. And kind of the same thing as PH. Notice here how price was underneath the daily 50, but then notice here how price was over the daily 50. So even though there's a lot of chop and a lot of noise, you can start to pick up that there's some differences in through here like that, and you can just start to go fishing. You can just start saying, I'm just going to start putting a few positions on here in this area, be willing to handle some noise, because even the bigger picture's generally looking okay. So I hope you guys work with that. This is the market that we're seeing. There are things that are good. I'm still seeing strong strength out there, good strong names, and kind of buy the dip. So yesterday, Thursday, when we saw that really big down move, turns out that might have been a pretty good buy the dip opportunity for some of the names out there. Anyway, hope you guys are doing well. Remember, if you're interested, you come over here to profitpilot.com, or you can check out Simpler Trading /Moxie, and of course we have the Moxie indicator on StockCharts.com. Great. Thanks again, guys, and we'll see you soon.